banks have realised how successful Tether has been. They want in on that action.
XRP was designed initially before stablecoins were even a thing.
I can't with good conscience think that's a good investment. In my head, I think we've got 100x return in Bitcoin in less than 10 years. Hey, if 100x in the next 10 years is not enough for you, maybe the problem's staring you in the mirror.
Peter Dunworth of the Bitcoin Advisor, welcome to the show.
It's a pleasure to be with you. Thanks for having me, Adam.
Peter, I have been looking forward to this for a long time, as have my staff and my audience. You are famous for your incredible Bitcoin price predictions. We'll get to that a little bit later. What I first want to do is actually speak to you about the emotion of Bitcoin. If I may give you some background, I've been teaching a lot of things for many years in many different subjects, but teaching Bitcoin seems to drive the most amount of emotion out of people. Notice some people get very excited, some people get very confused, but the biggest emotion when they're first exposed to Bitcoin is that they get very angry, very defensive, almost very insulting. I really want to ask you, have you had this experience? And if you have, what's going on? Why are people so emotional about Bitcoin?
I agree wholeheartedly. People get very emotional about Bitcoin. It's kind of like that and Donald Trump. It's a love-hate relationship. You either love or hate the person and love or hate Bitcoin. Plainly about this, I think a lot of the resistance to Bitcoin, a lot of the problems people see with Bitcoin is really about a lack of understanding about what that is. The initial response to Bitcoin, I think, is one of concern, one that enables you to raise a number of red flags when you first hear about it. And so it feels like a natural response, like an allergic response to something that's unfamiliar to you, to try and push that as far away from you as possible. And that is typically the emotive or emotional response that people have when they first hear about Bitcoin, is to push that away. And I think of my own very first instance when I first heard about it. My brother told me to buy it back in 2011, and I told him that's a stupid idea, the governments will shut it down. And I went through the whole lexicon of reasons why Bitcoin wouldn't work and why I didn't like it, but that was really coming from a place of ignorance. And I think a lot of the negative emotions attached to Bitcoin come from a place of misunderstanding or not understanding what this technology is.
Yeah, I have noticed, I was similar. When I first got into Bitcoin, I had a friend tell me about it, and I said, well, why would we even need that? And what I'm actually finding is, of course, in the more aloof nations, the richer nations, there doesn't seem initially to be a need for it. But as inflation is getting out of control, people are actually starting to learn about how it's caused. What I really want to touch on here is that the government has been blaming us for inflation. That is, you and I go and buy a cup of coffee, therefore we have caused inflation somehow in their paradigm, but you and I both know that inflation is in fact the inflation of the money supply. As the richer nations are now facing inflation moving from, as I said in my economics degree, the natural rate of inflation into perhaps super and even hyperinflation, what do you think will be the tipping point for the Western world beyond buy low, sell high? We can see that the bond market is in a world of trouble. Is there a tipping point where the Western world goes, we actually need this to counter the insanity of the biggest Ponzi scheme in the world, that being fiat?
That's a very good question. I think there comes a point in time when everyone on their own personal journey realizes that something's not working. They feel enough pain that it doesn't become a want, it becomes a need. And this is where, on a personal level, it's much easier to get there because there's not a collective. It's not a state that needs to move at the slowest pace. It can you can action on a personal level, which is a much quicker decision process. But from a state perspective, I think we are a long way from actually needing or realizing that we need it. Even though I can tell you I think we need it, we're a long way, I think, from the masses understanding that we really need this as a forcing function to hold government accountable to rampant spending. And this is where it will be applied on a personal level until such time as there's a critical mass achieved to then implement it at a government level. I don't know if that really answers the question, but it really is going to matter on a whole host of variables that are very difficult to ascertain at this point in time.
Do you think Donald Trump understands that the dollar is in a lot of trouble, or is he just there to make money on it? So we've got two sides to the argument. He's a very good businessman. He understands the future of financial markets based on the history and the reality of a unlimited printed money. We can also see Ray Dalio speaking about the change of the empire. We could see Warren Buffett in his farewell speech basically saying, the purpose of the governments is to devalue and debase currencies all around the world. Now you can see the United States embracing Bitcoin as a strategic reserve. What's that about? Is it just about making money, or do they realize that the dollar's in a lot of trouble?
I don't think those statements are mutually exclusive. So I think they can coexist at the same time. The world's greatest marketer It'd be remiss of him to miss an opportunity to leave money on the table like that. At the same time, I think he does understand that there is the Triffin's dilemma paradox in front of the US and the reserve currency of the world being the US dollar. I genuinely believe that he and Scott Bessent, the head of the Treasury, see this as a way to solve that issue that they've got. This is probably a counter to popular belief, but I think the US dollar can strengthen dramatically and maintain its reserve currency status indefinitely into the future by embracing Bitcoin. So I actually think it's quite a symbiotic relationship that not only will Bitcoin help solve a lot of the US debt problems and the Triffin's dilemma that it faces, but it can actually further strengthen and broaden the appeal of the US dollar globally as effectively a counter to Bitcoin.
Talk to me a bit about that, because we can see that they're really getting into stable coins. Tether, as an example, a major purchaser of treasuries, buying a lot of US bonds. And that seems to back up the US dollar a fair bit, put a demand on the US dollar. But when Bitcoin comes into the equation, maybe let's unpack the Triffin's dilemma and how Bitcoin versus the US dollar versus stable coins, how do they all work together to keep America at the top?
Basically, an economic problem that the global reserve currency faces, that as the global reserve currency, economies from around the world converge on that $1, the global reserve currency, as the medium of exchange. And what that has an issue with for the issuing country is it gives the issuing country, the US, an exorbitant privilege. This exorbitant privilege allows them to print money that the rest of the world uses for no cost. But there is a cost to it, and that is the cost of the internal manufacturing of the country. So what you've seen in the US is you've seen a rise of some very wealthy individuals on the coast, east and west coast, New York and LA, up and down California, New York. There's huge amounts of money in there. However, the flyover states, which has been a manufacturing hub for the US for the last 100 years, has been hollowed out, and you've effectively shipped all the jobs overseas to cheaper nations who can produce that far more efficiently at a lower labour cost. That has been the cost that the US has had to bear for being the global reserve currency. It's come at a cost of middle America. Effectively, middle-class families have exported their jobs and wealth overseas to China, and what you've seen is probably the most incredible economic situation happened in the last 2,000 years. Is this experiment, the US dollar being the global reserve currency, has effectively helped China bring 300 to 400 million, maybe more, people out of poverty into a middle class. But that's come at the expense of the US middle class, who have had to export their jobs overseas. So in short, what you've got is the US has the ability to print dollars for no cost and buy goods around the world with that money. And they can effectively, with that dollar, export inflation. And so over the last 50 years, what that's meant is that the major export of the US economy now is printed US dollars in the form of US dollars, or what they call Euro dollars, which is US dollars that are created overseas. That has come at the expense of the US manufacturing, because the dollar's risen so much in value that now it's no longer economical for the middle America to produce everything that it used to. The Triffin dilemma represents a real problem for the long-term economic success of the US. And this is where you enter the US dollar stablecoin, which you just prefaced, and Bitcoin. And so in sort of a very short summary or concise summary of this, the US dollar stablecoin market represents the ability for the US to basically export their dollars directly to the end consumer. Take, for example, Facebook is looking to launch a US dollar stablecoin again. They have 2.8 billion users globally and no more than 300 million or 250 million in the US. That means they're going to have roughly 2.5 billion users that are external to the US. And if they tie a US dollar stablecoin to that, there's now 2.5 billion more users of US dollar or Euro dollars globally. When you also tie into the fact that the US could actually underpin its entire global reserve currency with Bitcoin, we now have the making of the ability for the US to claw itself out of this Triffin dilemma, use Bitcoin as a way to pay off the national debt, which has been, classified as untenable or a losing battle. It's in a death-debt spiral that can't be pulled out of. But I firmly believe that with a US dollar stablecoin issued to the rest of the world, the US can and will manufacture a way to get out of this debt that they're currently in through the use of Bitcoin and this US dollar stablecoin and exporting that to the world.
If that's going to work for the United States, would it work for Australia? Let's think about, so we can see on the US debt clock and the global debt clocks, we're all playing in this Ponzi scheme of printing money linked to nothing. Could Australia adopt a Bitcoin standard, or at least a strategic reserve of Bitcoin, and do something similar to get rid of their debt?
Yeah, I think they could. But the US is the global reserve currency. So there's demand for 8 billion people for US dollars. And there might be maybe demand for 50 million people globally for Australian dollars. So we'd have to be a little bit smarter around solving that problem. We could be the first nation to issue a Bitcoin-backed bond where, you tie a long duration bond that the government issues every day or every week, every month, whatever it might be. And they assign a small portion of that bond on a longer term basis to buying Bitcoin. And so what you do is you bind the price of Bitcoin into the future to the bond that you're issuing. And this is a way for ensuring that investors who are buying these bonds aren't going to suffer negative real returns, which is the case for all bond investors over the last, say, 15 to 20 years. They've effectively suffered negative real returns. And by creating a Bitcoin-backed bond, the Australian government would be far more successful at issuing and selling a lot more debt. So they'd actually be able to do a lot more too, and at the same time, that would underpin the security of the Australian monetary system with Bitcoin. So it would be a win-win-win. The investor would win, the Australian government would win, and long-term Australian citizens would have the benefit of being able to use that Bitcoin-backed bond to pay down future debt as well.
Where I'm confused is I've interviewed a lot of politicians in recent times leading up to the election and post-election, and I ask all of them their understanding of Bitcoin, and there seems to be a big knowledge gap when it comes to Bitcoin. And it also seems like there's competition between the banks, gold, Bitcoin, and perhaps the US dollar to an extent. But I guess where I'm going with this, do you think the Australian government understands Bitcoin to the extent, in a recent court ruling, we saw a Victorian judge say that Bitcoin is in fact a currency and therefore should not be subjected to capital gains tax. Now, I think it'll be appealed and the government will be addicted to tax from capital gains of Bitcoin. Kind of a two-part question here. Why doesn't the government understand Bitcoin? And if they do understand it, would they embrace it to be in fact tax-free and in a strategic reserve?
That's a very good question. As an outsider looking in, it looks like the government doesn't understand the potential that is represented with Bitcoin. So there is just a fear of the unknown there. However, I think we've got the opportunity to have one major policy initiative by the US administration will be the chink in the armour that will lead to a cascade of understanding, and that is the repeal of SAB 121, which was the legislation in the US reporting on regulating how the US banks are to custody Bitcoin. It was effectively economically unviable for US banks to custody Bitcoin because of the reserve requirements or the capital adequacy ratios that required to leave that on the balance sheet. The US administration has since scrapped that. So now what's going to happen in the US, and this is where we're going to filter our regulations based on theirs because we're effectively downstream of the US. The US is now going to allow banks to custody Bitcoin without any capital requirements, which is probably how it should have been in the past, but that's now been introduced. So that is then going to lead to the lending products coming on and the savings products. And once those two things, once the custody happens at the bank level, the savings and loans products will follow immediately. And then our banks, our government will then get a very quick understanding of what the opportunities are in the Australian sector for having that type of accounting for custody of Bitcoin. And this is where I look at and think therein lies the huge opportunity for these banks and governments to really embrace and adopt Bitcoin, because what we have at the moment is, if we look at the global problem that we're facing, and it's no different in Australia, for the last, say, 50 years, we've been addicted to debt. And I can give you a lengthy version of this or a short version of this. I'll start with the short version. If we want to go into it, I'll happily dig deeper on it. But in short, we've had a credit expansion problem where not only expanded credit whereby personal Australians are up to their eyeballs in debt, we've then kicked the can up to the corporate level where the corporates are now up to their eyeballs in debt. And the recent COVID basically kicked that problem from the corporates up to the government level, both state and national governments. And so what we have now is all of our levels of our societal structures, personal, corporate and government, are now up to their eyeballs in debt and can't afford any more debt. If the interest rates go up, then we're basically insolvent. They need to come down. And there's no asset class that isn't full of this debt as well. So I look at that and think, therein lies the opportunity for Bitcoin from a banking perspective, because now we have an asset class with no debt on it. With the new legislation coming through in the US, that's going to present the opportunity for the Australian banks to custody Bitcoin, and custodying Bitcoin is going to allow them to issue savings and loans products on Bitcoin. And this is a whole new asset class that didn't exist 16 years ago. And it's the first new asset class in over 150 years that the banks have got to play with. So I look at this and think, this is the asset class that can grow dramatically. And ironically, this can take an unlimited amount of credit And so the important thing, and this is where I think governments, once they understand the true power of Bitcoin, they will realize that the most important thing about Bitcoin is this is the most pristine collateral we've ever seen. It's the best form of collateral that's ever invented. What I think is a superpower that's completely underrated, never talked about when it comes to Bitcoin, is Bitcoin allows Wall Street to speculate without having mainstream consequences. And what do I mean by that? It means Wall Street can basically bet on Bitcoin going up and down, and there's going to be no mainstream consequences. And by mainstream consequences, what I'm talking about is, at the moment, Wall Street basically bets up and down, and we see a GFC style situation where they blow up the entire world's housing market because they've taken out mortgage-backed securities, they've bet against them, they've got credit default swaps, they've got all sorts of these financial products on financial products, which is tied to the cost of housing. And so when Wall Street blows up the speculation, Main Street basically picks up the cost for it and has to bail Wall Street out, which is a pretty onerous feeling on mums and dads of the world because they didn't have any part in the speculation. And so what's the superpower of Bitcoin? I think, and once governments see this, they're going to embrace this. This allows Wall Street to speculate, but it doesn't have the consequences of creating cost of living, housing pressures. It doesn't increase the cost of living. It also doesn't increase long-term inflation as well. So I look at this and think we just have a knowledge gap between, say, the governments and the banks, that once they understand what this thing is and how they can monetize it, and most importantly, how it can benefit them, once they understand that they're in the prime seat to benefit the most out of it, that will be adopted and integrated and it'll become mainstream.
I had never considered that paradigm, because certainly what we're seeing in Australia is that the banks are preventing a lot of people buying crypto. Now, there's two arguments here. One argument is they're trying to protect the consumer from all the scams that are in crypto. And I argue that crypto is not a scam. It's a scammers. Who are the scammers? Just as a telephone's not a scam, you can use a telephone to scam people, and you can use cars to do crime. What we're seeing in the crypto land is, in the past, when I first got into crypto, I could transact as much as I wanted between banks and exchanges, tens if not hundreds of thousands of dollars daily. The Commonwealth Bank, as an example, is only allowing $10,000 per month. Now, on one side, they're saying, hey, we're protecting the consumer from all of these scams. But on the other side, my perhaps cynical nature is saying, no, you realize that this pristine asset is more appealing than what you're offering on the ASX or through property investment. And you can see a lot of Australians shifting into this dynamic space of huge returns, and, as you said, the pristine asset being Bitcoin. The banks actually do understand they could make profits in the future, but they're just trying to squeeze as much juice out of the lemon that they've got right now? Or is it that we are, as you mentioned, we're just waiting for America to pave the way?
I think there's a little bit of both there. It's very difficult for the banks to get excited about Bitcoin because there's so little reward for them. And to be fair to the banks, it's absolutely fraught with risk that they can't mitigate. The second a transaction goes to an exchange that buys Bitcoin and then shifts the Bitcoin off the exchange, the banks have no recourse to recover that. Whereas when we play inside the bank's playground or little sand pit that they set up, when you do transactions to the wrong account, to the wrong address, whatever it might be, the banks can basically call an audible and backtrack that, or basically reverse the transaction. But with Bitcoin, there's no backsies, there's no cancel button, there's no takebacks, and this is the problem, that I think there's a knowledge gap again with a digital bearer instrument, that a lot of people haven't worked with or understand the finality of Bitcoin and the fact that it is an immutable ledger, and once it's gone, there's no way that you can recall that. There's no court order, there's no government mandate, there's no injunction that can be placed on that transaction to return it, whereas in the banking system there is. And this is where I think although it's disappointing to see the banks limit the transactions and the rest of it, there's very little by way of reward in supporting this transaction, and there is a whole lot of risk to it. So I understand why they do it, although I don't agree with it. I constantly get infuriated that a bank wants to tell me what I can and can't do with my money. I do understand their rationale for it, because it is a very expensive line item when it comes to fraud that they're just refusing to fund now. So now they just say, look, this is a transaction that you enter at your own risk, and if the transaction fails or it's the wrong address or you get scammed, then that's on you. And clients are now signing waivers to confirm that they're happy to do that.
Yeah, where I get a little bit frustrated is, I say it's my money. You have no problem, banks, with me taking money out of the casino and losing all my money at 3 o'clock on a Tuesday morning where there's alcohol served and it's a gambling casino, if you will. But when it comes to even if you want to call it the investment space or the crypto casino, even if it's an established exchange in Australia, like the biggest exchanges, they're still restricting what I do with my money. And what we've actually also seen is that there's a lot of people being debanked in Australia. I want to touch on that and get your insight onto the debanking of some people who are involved in crypto. I had a guest on recently. He's a long part of this community, a big part of this community, and he was recently debanked just when he arrived in Thailand, and the Commonwealth Bank rang him up and said, "No, we're debanking you." He's like, "Well, what have I done?" It's like, "No, we've made the decision. You're out." Had he not had Bitcoin, he would not have had the opportunity to finish his holiday in Thailand because he found out just as he arrived. We can also see that there was recently a gentleman by the name of Lewis who was given a demand by the bank saying, "Why did you take this money out? Where have you put the money? If you don't respond to us, we're shutting down your accounts." My concern, Peter, is that the banks seem to be acting like the police now, policing what I can do with my money and shutting me down as the police, judge and juror. How do we counter this? First of all, am I paranoid with what's happening here, or is it a reality? And are the banks stepping out of line?
It's absolutely a reality, but they're only going by what the regulators are asking of them. So I don't think the issue is with the bank, the issue is with the regulator. Given the reason why I draw those conclusions is I've seen multiple cases where the banks have shut down accounts for no obvious reason. It's gone to the credit ombudsman or the financial services ombudsman to be adjudicated as to say, why have you closed this account? This seems like an unfair closure. And because the banks are effectively a public service infrastructure and they're given licenses at the behest or on the good grace of the Australian government, they have an obligation to provide certain services. Despite all of this, the financial ombudsman basically sided with the bank and said they're within their right to do that. And quite frankly, that is in contradiction to the statutes that we have to give customer protection and ongoing service from the bank. So I look at that and think it's on behalf of the regulators that they're acting, and this is something that comes from the top that they've been told to do, because not even the policeman of the bank is siding with the customer, even though they're in clear breach of their responsibilities or duties as a service provider in Australia of banking services.
Does that make you want to be debanked, as in voluntarily? Like in your life, if you want to adopt the Bitcoin standard, do you want to move away from the banks yourself?
Definitely gives some motivation to that when you've experienced that on a personal level. It really hits you quite viscerally. We talked about emotion. How does Bitcoin elicit such negative emotions? Let me tell you, there are very few emotions more negative that are elicited from a bank telling you what you can and can't do with your own money. This is the beauty of Bitcoin, that once you have Bitcoin and you self-custody it, no one on earth can tell you what you can and can't do with that Bitcoin. So therein lies maybe a powerful counterpoint to a negative reaction to Bitcoin when you first hear about it.
Well, this is why I think on the global stage, so you've got BRICS, Bitcoin, gold, and the USD. Now, depending which camp you speak to, they say, no, it's always going to be the USD. And if you speak to Schiff, it's like, no, gold is the future, even though it hasn't worked in the past or present. Someone like me, I'm big on a Bitcoin standard. And then if you speak to Brazil, Russia, India, China, South Africa, and the other nations, they say, well, we've got BRICS. What's interesting to me is that when you see the sanctions that were put on Russia, whether it was good or bad, that's irrelevant. What it showed the world, of course, is that if you don't do what America likes, they'll cut you out of the SWIFT network, call you an oligarch, pillage your accounts. And that was a real eye-opener to the world saying, oh, do I really want to be part of the US dollar? My question to you is, going to the global stage, is why would the world continue to use the US dollar when it's printed without limit and also controlled by a central body who can punish you without any trial or recourse if you do something that they don't like?
Is because it represents an exponential improvement on the existing currency that their government's working with at that point in time. The Australian government has been a very good custodian of the Australian dollar on a relative basis. The US has been the best custodian of their currency on a relative basis, and that's why they have the status of the global reserve currency. The US has debased their currency to the tune of 7% per annum since around 1950 or 60. So every year they've printed another 7% more money, and that's debased the money to the tune of 7% per annum. Australia has had a very good, sensible government for the most part that has printed on average 9 to 10% per annum over that same period of time. So we've had a good government, not a great government, and the US has had the best. They've been the adult in the room when it comes to the printing of more money, and no one has had to show more control or restraint when it comes to that, because they had the privilege of being the global reserve currency. So they could have happily printed whatever they wanted to buy, whatever they despite that, they still limited the production of that money to 7% per annum. So I look at this and think, the US dollar is not done yet. I think that's got a number of years ahead of it. And our job is to help people understand why they would want to use Bitcoin as opposed to the Australian dollar or the US dollar. And this is where, on a very short time frame, the use of a US dollar or Australian dollar, whatever your local currency may be, would be a huge benefit, because you're not going to have the spikes in volatility that happen when holding Bitcoin. But over the long-term savings, etc., you want to hold that in Bitcoin, because through time that is going to increase its purchasing power relative to a dollar, whether it's Australian or US, that is going to lose purchasing power through time.
I often argue on this channel, I say, if you want to lose your purchasing power, save in the dollar. If you want to maintain your purchasing power, save in gold. And if you want to increase your purchasing power, save in Bitcoin. When BRICS comes into this, where do you think on the global stage BRICS comes in? Is it just a pipe dream for these nations? Will BRICS compete on this global stage, or is it done before it even starts?
It's not even a question. Who on earth is going to trust the Indian government not to print over the US? Please.
Well, I'm glad
the Russian government not to print. No way. Yeah. Brazilian government, forget about it. Like, for starters, which currency are you talking about? You're talking about the yuan or the renminbi? I mean, this is a government that's running two sets of books, and you're asking them to be the global reserve currency. I just find this completely comical. Even the BRICS nations don't trust each other. They prefer to use US dollar or Bitcoin. And until such time as Bitcoin gets big enough, they'll be using the US dollar, I'd say.
Why does it even exist? Because I laugh in the same instance where I say, oh no, if we couldn't trust America, we can trust Brazil, Russia, India, China, South Africa, and the other 30 nations. Sure, we can trust all of them. Like, how do you even audit it? And they say they're going to back up the currency with either gold or a basket of goods. But yeah, it still seems to be going. And Trump, he said that if BRICS is launched, they're going to put, I think he said he's going to put an immediate 200% tariff on these nations. In the macro, what we're seeing is that people are fed up with the US dollar, even though it's reliable to an extent. But the bonds, we saw recently when the US Treasury went to auction with their bonds, no one bought the bloody things, and the Fed bought them off themselves. But yet BRICS continues to move forward. So what are they doing? Are they just bluffing? Are they trying to push America into the corner, or are they going to try and crack ahead with it?
That's beyond my pay grade, but I just look at this. Looks like a cat, walks like a cat, smells like it's a cat. Like, it's something I would not want to place any meaningful dollars in. I wouldn't trust that currency as bad as the US. And this is what I think we really fail to comprehend. And this is probably really centered around a lot of the conversations that come out of the US, is that as bad as the US is, everywhere else is so much worse. And until you get out of that little eco bubble in the US and realize how bad everywhere else is, the thought of BRICS and the rest of it, is an idea that you think can have, hold weight and possibly take over, but then you realize the harsh reality of what is actually out there, and realize it's back to the US dollar, and probably pegging that through stablecoins to Bitcoin.
Perfect segue into stablecoins. There has just been a massive rise of stablecoin producers, if you will. So we start off with Tether, Circle. Now, if you go through the charts, there's countless stablecoins being born per se. And then in the States, it appears that the banks have the right, if you will, to issue their own stablecoins. Two-part question. Are these stablecoins going to be able to talk to each other? And will there be a continual rise of all banks issuing their own stablecoins?
Yeah, I think there will be. You've already got Tether on Tron, you've got Tether on Ethereum, you've got Tether on all of the chains. Then you've got Circle. I think there'll be a cross-rate swap that you'll have to pay if you're swapping from, say, Circle to, or from USDC to USDT. The banks have realized how successful a business model Tether has been. They want in on that action. And I think what's really fascinating is that the US banks operate a fractional reserve banking system where they get their money for nothing, print it out of thin air, and loan that out at a margin. What's interesting is that Tether is far more profitable than any of the banks in the US, and they don't have access to the fractional reserve banking system, and they make their money solely on backing one-to-one their US dollar stablecoin with an investment in US treasuries.
I recently saw XRP or Ripple offer to buy Circle for billions of dollars. Have you got an opinion on where XRP fits into this? Going back a step, XRP was designed initially before stablecoins were even a thing. Now stablecoins have come in and you can see banks are adopting it. There's an argument that, no, the banks are going to use Ripple. There's another argument that's like, no, it's going to be stablecoins. What are your thoughts?
There's a possibility that they're actually going to use USDT on Ripple. The problem with that, though, is I don't think that's going to lead to value accretion in the XRP token. It's actually going to lead to value accretion in the USDT market. So it's going to be really great for Tether, and it's going to leave like effectively a parasite. Tether will come in, use the infrastructure of XRP. XRP will be able to claim that it's doing lots of things. For the uninitiated, they'll look at that and think, wow, that means XRP should go up a lot in price. But they don't realize that the value accretion is actually going to be at the core level with Tether, not XRP. So I'm not too positive on the ability for XRP to capture that value accretion in the US dollar stablecoin market.
I tend to agree, and I acknowledge it creates a lot of emotion for those who have invested in XRP. And I just wonder, has XRP missed the boat? Because, as I mentioned, XRP or Ripple was established before stablecoins were even a thing. And then you have Ripple issuing its own stablecoin, but then also trying to buy other stablecoins, but then banks issuing their own stablecoins as well. So we seem to be flooded with stablecoins. Just to close off on that one, if you were an investor, would you be buying any XRP?
I can't with good conscience. I think that's a good investment until such time as Ripple or the producers of XRP hold none of it on their balance sheet, until such time as that's mitigated to less than 1% of supply or issuance, then I don't think XRP is an investable asset. I hate to say it. So I don't want to be too derogatory to XRP, because I know a lot of people have invested a lot of money in it. I know a lot of people who have staked their life savings on XRP, and for the life of me, I think that's going to be a very, very costly mistake, and I hope it isn't, but that's my take on things.
I absolutely concur, but I acknowledge exactly what you said. A lot of people have gone all in on XRP and other altcoins. This is probably a good segue into altcoins. So if you speak to Michael Saylor, he says there is no second best. It's Bitcoin all the way. Certainly in my journey in crypto, I started off my journey mining Bitcoin. That's how I got into this space. I was fascinated that you could plug a machine into a wall and money came out the other end. We say on the channel, we come for the Lambo and we stay for the revolution. I think the biggest financial mistake I made in these markets was, with all the tens, if not hundreds of thousands of dollars I spent on mining and the electricity associated, I would have just been better off buying the Bitcoin. But I can now say, as an expert in mining, I've got a great understanding of how it all works in the background. I think the other mistake I made was I probably went too heavy in a lot of altcoins. And the longer I'm in this space, I can see that it just seems to be all Bitcoin. However, there's also a great use case for Ethereum and some of the coins out there. I think HBAR's also got some very impressive back end. Moving into the altcoin space, is there anything that's appealing to you?
I'm not sure. I've got no strong opinions on this. The last time I looked at this in depth, I felt that there were limitations with Ethereum. I don't think it really scales. Solana is not decentralized. Two last ones I looked at. I know Sui is getting a lot of attention. For the most part, the rest of it seemed to be meme coins or some variant of that. And I look at this and think the developments that are happening in Bitcoin, I want to say nearly 9 years ago now, you had Liquid Network, which was created around the same time as the Lightning Network. And that was developed by Blockstream as a way to do a whole host of programmatic transactions on Bitcoin. It was a way to scale Bitcoin beyond the limitations of the 7 transactions per second. The reason why that didn't get up is because of the block size wars back in 2017, when Samson Mow and Adam Back basically had to forego their aspirations for a layer 2 on Bitcoin to conserve layer 1, which was the block size war that we talked of or probably knew about, where Samson Mow, Adam Back were on the side of the small blocks, and then you had the big blockers in Roger Ver and Craig Wright talking about big blocks as a way to basically have unlimited transactions on the Bitcoin network. And that was never meant to be the case for layer 1, I believe, rightly or wrongly. And so what I'm seeing is everyone thinks that Bitcoin's a pet rock, and it doesn't change. It's probably getting close to that point in time where it won't change moving forward. It will have the ossification. But there are a whole host of innovations that you can do on the Liquid Network which solve the scaling problem solves the programmatic transactions that you have in Ethereum and the rest of it. And I look at this and think, at the end of the day, the only consideration you want for being able to do transactions on a network is security. And this is where Bitcoin has never compromised its security, whereas every other blockchain has a compromise or a trade-off to that security. So I look at this and think, Bitcoin will accrue the majority of the value moving forward. And as those layer twos build out and become much more functional, there's going to be the opportunity for Bitcoin to eat the other network's lunch, not the other way around. That said, I think in the short term, there's some really exciting things happening on the other networks. But what we've seen in the past, which I think we've forgotten this cycle, that is if there's anything that is of meaningful improvement in the blockchain space, Bitcoin can adopt it and integrate it into its network. So it just hasn't done that to date because there hasn't been any major innovation that's better than the current use case that it has. So I'm not sure if that's the answer you wanted, but that's just my take on things. And I think the reason why those altcoins garner so much attention at the moment is because a lot of people believe, rightly or wrongly, that they've missed the boat with Bitcoin and they think all the gains are behind them. I'm very optimistic about Bitcoin and think that there's more gains in front of us than behind us. So you don't need to go out the risk curve to go into the altcoin market to achieve a 100x return. That and more can be achieved on the Bitcoin network. You just need to change the timeframes that you want the 100x. So in my head, I think we've got a 100x return in Bitcoin in less than 10 years. I look at that and think, conversations I have with clients is that, hey, if 100x in the next 10 years is not enough for you, then maybe the problem is not with Bitcoin. Maybe the problem's staring you in the mirror, and you need to have a good hard look at what your expectations are for building generational wealth.
I come across the same situation, but people, let's face it, we're greedy. We have a fear and greed index, and we're greedy. We want the 10,000x, we don't want the 100x. And it's like, what I try to explain to my clients and to my viewers is that you're forgetting the risk. It's 10,000 times riskier, but you're just focused on the return. The other argument I get from many people in the space is they say, my coin's a better Bitcoin. And I say, well, first of all, what does better mean? And second of all, if it's better, why doesn't your coin have 62% dominance of the market with a $2.2 trillion market cap? And sometimes the response is, well, because everyone else is stupid. It's like, well, maybe the market has some insight that you don't have here. Yeah, that's right. I also look at Bitcoin as like, in construction, a metaphor, if you will. I look at concrete as Bitcoin as concrete or steel. It's slow, it's heavy, but it's predictable and it's reliable. And as it's layer one, if I've got some really good concrete and steel, I can build some incredible things. And then I can do, if you will, lots of layer twos within that building per se and create a lot of great things. But no matter how big my building is, if it's not made out of good steel and concrete, it's going to fall to pieces. And as you mentioned with Solana, we can see some of the issues we've had with Solana. Ethereum Foundation has forked off itself. If you even go all the way back to Ethereum, that sort of forked off itself. But you've got this, I think, two camps here. You've got the speculators who just want to make a lot of money, fair enough. But then you've got the tribes within crypto who are so proud of their product, their brand, their community. And this is where more emotion comes into it. So at the beginning of this video, I spoke to you about the emotion of newbies coming into crypto, not understanding money. Then when you get those who come into crypto, they believe that the statement that drives me crazy, Peter, is my coin's a better Bitcoin. When it comes to the tribalism within crypto, have you, in your Bitcoin journey and with all the clients that you work with and the massive exposure you have on the internet and a lot of people seeking your guidance, has anyone really come to you and said, no, it should have been Bitcoin Cash, it should have been Bitcoin SV, it should have been my coin's a better Bitcoin? And if so, what's your response to them?
It happened quite a bit. There was first Bitcoin Cash, there was first Ethereum. A whole host of people have talked about better Bitcoin more recently, and to my absolute shock, I've had people try and tell me that Bitcoin SV is the one that's going to take over the world. And I think the only comment, albeit try and temper this in a much more subtle way, is look at the scoreboard. There's only one way to determine what's successful. The market has dictated that Bitcoin is the winner. And to your point earlier about 62% dominance, no other coin gets close to that. And this is where I look at that and think, well, the market has decided that it is Bitcoin and the rest there is no second best, as Saylor says.
Yeah, I agree. So I read The Bitcoin Standard, and that was a fascinating book. And then I also read Hijacking Bitcoin by Roger Ver. Have you had the chance to read that book?
No. I think there's a very liberal interpretation of events that, from what I've seen, that are very different to how I remember them. So I think that's a color-coded in rose-colored glasses historic look from Roger's side of things.
There's a lot of accusations in the book. I certainly read it just so I could have a perspective of what the Bitcoin Cash camp was saying. Equally, it's funny that you should mention Bitcoin SV, because at first I thought it was a lot of people just trolling me and saying, when they say, no, Adam, you've got it all wrong, it's Bitcoin SV. And I'm like, are you kidding me? But ultimately, as you mentioned, the scoreboard, the truth is in the markets. It's not what I say, it's not what you say, it's what the market says. In the market, if you look at the ETFs, if you look at the Bitcoin Strategic Reserve, if you look at the data, if you look at the money flows, if you look at the price performance, everything's Bitcoin. But the counter argument to that, just if we can try and get, I guess, test our own ideas, is just because you're first through the door doesn't mean you're going to win. You might like to look at Yahoo or AOL. They may have been first through the door, but they didn't come out on top. However, I say, ultimately, I think in my mind, Bitcoin's strength is that there is no company, there is no person, there is no CEO. It is just merely a code. What's the biggest risk to Bitcoin in your mind?
100% apathy.
Expand.
An Australian slogan, which is synonymous with Australia, is "She'll be right, mate." And that kind of attitude when it comes to Bitcoin, we'll see Bitcoin fail. As long as it matters to some people or one person, then it has a chance of surviving. And this is where I think as time goes by, Bitcoin will integrate itself into our daily lives and will be as important, if not more important, than the internet. So I think the chance of people being apathetic toward Bitcoin is slim to none. And as governments continue to print, as governments continue to abuse their role in providing monetary stability, having an inflation target at 2%, that's basically they change the numbers so that it is 2%, but it's actually in fact closer to 5%. As long as they keep abusing those privileges, there's going to be a place for Bitcoin.
My concern, though, is that we're financially illiterate. So I can't remember once throughout school, we're both Aussie, and maybe you had a different experience, but I was never once at school taught about money, ever. When I did my second or third degree, it was a Bachelor of Applied Economics, and I thought, well, maybe that teaches me money. But the truth is, I actually didn't really learn about money until I got into Bitcoin. Bitcoin made me realize, hang on a second, what the hell did I just do at university for all of these years? And why haven't we been taught about money? So we've been taught how to earn money, as in go to school, then get a diploma or a certificate from a centralized body, then go work for another centralized body, shut your mouth and get your pay and crack on. But no one actually ever teaches us what money is. Is that by design or just by default?
It's very difficult to impugn intent. So I would like to think that our governments have our best interests at heart and want to do what's in our best interests. But at the same time, I think it'd be very difficult for them to pull a curtain back on the Wizard of Oz and show us how things really work. So maybe there is a little bit of both with that capacity.
I would like to see it introduced into schools. I would like it as part of the curriculum to say, right, this is where money comes from. But I can't disagree with you. It's like pulling back the curtain for the Wizard of Oz. You can actually see all the fraud that's happening behind the facade of where money comes from. Like, there's still so many people in Australia who believe that there's some mythical cave, if you will, filled with gold that backs up all of our dollars. And it's like, no, the money's printed out of thin air, and yet they say Bitcoin's a scam. And it's like, no, I think you need to understand where money comes from.
The gold's gone long ago.
Do we even hold gold in Australia, or is it all in London? Where's the gold?
Good question. I'm not sure. I don't think we've got serious amounts of gold here, that's for sure.
Do you think Australia should sell some of it and buy Bitcoin?
If you could guarantee that the gold sold would go directly into Bitcoin and we were swapping one for one, I think that's a very good idea, on the proviso that you can't sell that for the next 30 years.
Who are your customers? So who's coming to you to get your help, either through guidance or purchasing Bitcoin? Retail, mums and dads, or institutions?
I would say a mixture of both. The institutions are a small institution, NGOs, charitable foundations, family offices on the higher side, or larger purchases. For the smaller purchases, there are a host of mums and dads, predominantly baby boomers, who can see the writing on the wall. They see that the jig is up in the property market. They understand that everyone is up to their eyeballs in debt, and they can't fathom how the next generation can afford to pay for the property that they're currently holding. So we spend a lot of time, baby boomer clients, helping them set up their accounts, exchanges, purchase a Bitcoin, and then most importantly, moving that to a self-custody environment that ensures that that's in a safe spot, that they'll never get hacked or rugged or have their Bitcoin stolen. And most importantly, self-custody piece, we provide a framework around the ability for them to transfer that on their death with a seamless process so that their beneficiaries will benefit from their hard work and holding of Bitcoin.
We can see in the United States and throughout the world, a lot of property investors are selling a lot of their real estate to get into Bitcoin or just expand their Bitcoin holdings. Some of my clients and viewers come to me and they say, should I be buying property or Bitcoin? It's like, well, it's a tough one. I own a lot of property, but I am not impressed with it at all. And I will not be buying any more because it just seems like such a fake market when you can see tax on unrealized gains coming in for your pension. It's probably inevitable that they're going to put tax on your unrealized gains for your property. My property, as in my physical real estate, is not very mobile. It's not very fungible. It's not very liquid. And when you actually start to break it down, Bitcoin versus real estate, it's like, why would I put any more into real estate? I don't think that the vast majority of people have made this distinction yet. But if, let's say a client came to you, let's do a thought experiment. Someone comes to you and says, Peter, I'm a single guy. I'm 30 years old. I've got $1 million. Do I buy a house or do I buy Bitcoin? What do I do? What would you tell that client?
Put it all into Bitcoin.
Straight up like that. Expand. Why wouldn't you buy a house?
It's that simple. The math ain't mathing when it comes to property investment anymore. And the problem is that we've got interest rates much higher than they were, say, 5 years ago. You've got a tapped out residential property market, which is where most of the property investment goes. You have government, which is impinging on what I believe to be civil rights. The windfall gain tax, I'm not sure if you're familiar with this in Victoria, but that to me represents a gross overreach on behalf of the state government in taxing unrealised gains of a property for revaluing or rezoning it. And I think these things are going to continue to happen. And we have a political setup where, for the first time in probably our nation's history, it feels like there is undertones of people not happy with the level of immigration that we have. And this is where a lot of the property gains that we're seeing are supported by newcomers to Australia, immigrants, who are helping support and buoy the Australian property market. And when you look at every facet of property and how that is, derives its value and increases through time, that's typically driven. There are two drivers to any capital gains through time, and basically property investment is an investment in capital gains through time. But the two key drivers for that is credit growth and demographic, like basically more people in the country. There's pressure on more people coming into the country, and a lot of people want to see less of it. Whether that's your political opinion or not, I'll just leave that to you, but tell you there is a groundswell of a movement that's saying, look, we've seen enough immigration for the time being, and we want to stop that so we can have the housing affordability crisis that we're going through, we can get a grip on that. So that's the first driver. The second driver is credit growth. And you look at credit growth and what goes into that, serviceability and the credit policies that allow you to create credit growth. And the credit policies that we're currently working with in Australia have been expanded so much relative to where they were in the sort of 1970s. I don't know if there's anywhere to go from a credit growth perspective. And then you look at housing affordability, the median house price of Sydney relative to the median income, and it's never been at a higher level, which tells me this isn't sustainable, what we have right now. We need a correction or a reversion to mean. Alternatively, the government will probably change some policies, like they'll make interest on your home tax deductible, and then that will continue to create a spread between those two things and increase the problem that we're currently facing.
I often wonder if they made Bitcoin tax-free in Australia. The Australian government seems to be addicted to immigration, perhaps because its Australians aren't reproducing as much as they used to, in that sense that they seem to be supplementing that population shrinkage with lots of immigration. If we had tax-free Bitcoin in Australia, maybe that would attract highly, perhaps financially successful immigrants into this country, but that would put a greater demand on the property market, making it even further out of reach for immigrants and Australians alike. What I'm seeing is that they just need to release some land, but they're not doing that. It seems like they've financialized or monetized a real estate market, and this is where Australians are seeking somewhere to park their money. And of course, this is where we were parking our money in the past. You couldn't keep it in fiat because it loses its purchasing power. Even if you put it in the bank, the returns weren't keeping up with inflation. So you put it into real estate, but now that's not impressive for all the reasons you've outlined, and particularly when there's comparative markets. Just to touch on this point again, do you think it would be beneficial on the macro for Australia to make Bitcoin tax-free?
Absolutely. But whether or not we're going to see that is another thing, because the problem with the governments that we have at the moment is, and this isn't just an Australian phenomenon, so the governments around the world are starved of tax dollars, and they're looking for any way, shape or form to increase their revenue. Hence why we've seen the land grab for unrealised capital gains tax in our superannuation fund balances over $3 million. I look at this and think this is the thin edge of the wedge, and they will look to extend that to not only the superannuation, but trust companies and our personal assets as a way to bring in unrealised capital gains tax, because they think that's a way to increase tax revenue. Sadly, if you look at that in a historical context, that led to a host of wealth driven out of France into Switzerland, and you've seen that more recently, I think, in Iceland or Norway, one of the two. Basically, they've budgeted for X amount of dollars from this unrealised capital gains tax, and what they actually found is that most wealthy people left the country because they were so abhorred by that type of policy. They just took their money and left a big hole in the budget for the government.
Exactly, and that's what the Laffer curve shows us. That the simplest macroeconomic graph in history, I would argue, that once you start taxing too high, you have those exiting the economy, and so you start to lose tax revenue. And that's certainly what we're seeing in Australia. A lot of my colleagues, a lot of my clients, they're fleeing the country because they're going to where their money is treated best. The biggest expense in my life is my government, and it gets to a point, it's like, well, what am I getting in return here? And you can see capital flight. You can see a brain drain where people are leaving the country. What do we do to reverse this? Do we even bother? Or as Australians, do we just say, right, thanks for having me, Australian government. I can't afford to stay here anymore. Farewell. Or do we stand up and fight without violence, of course?
I don't think there's the ability to fight. So if you're upset with the status quo, take your money and leave. Go to where you're treated best. And this is the beautiful thing holding Bitcoin, that you can move very easily with no friction. However, if you have your capital tied up in property and shares and all sorts of things, then it's going to be very difficult for you to leave. So you will put up with a whole lot more mistreatment by our governments. And so I think that's going to get progressively worse as the reality of the budget deficits bite. And we have a host of people who are relying on the government for their day-to-day living. If you look at the jobs numbers and unemployment, if we didn't have the NDIS, we would have a severe problem with unemployment. But it looks like that government program has taken on nearly 50% of all new job applicants in the last 5 years or 4 years. So I think there's major problems here, that it's going to be very tough in order to turn that ship around, because so many Australians are now reliant on the Australian government, and it's very difficult to get someone to change their mind when their very existence depends on them thinking a certain way.
I was exposed to a concept called the triangle of dependence on the Australian government. And that triangle of dependence is, first of all, the public servants themselves, a huge portion of the workforce. Then you have the welfare state, those getting paid by the government. And then you have the contractors doing direct work for the government. So when you look at that triangle of dependence, that's a huge amount of the Australian population that is directly dependent on the government to put food on the table. This links to what the government is spending all of their money on. In your observation, in your research, all these taxes that they're accumulating and expanding, what are they spending it on?
I really don't know. It feels like we have a huge NDIS industry. There's a whole host of programs that are having money spent on certain sectors of the economy or population, which I don't really quite fathom. And personally, I've checked out of that on a national level. I don't pay much attention to it because I don't have any control over it. It seems like regardless of who we elect, whether it's the coalition or alternatively Labor, the spending remains the same. There's no impetus to curb spending or put in effective measurement of cost benefit analysis of these programs that we're spending money on. So it's very difficult to want to care about things that you've got no control over. So I'm sad to say I've checked out a little bit when it comes to these things and quite ignorant of the problems that's presented locally for that reason.
Sadly, Peter, I can see it in your body language. I can feel it in your tone, and I echo it to a certain extent, because it's once you start paying 6 and 7 figures to the government every year, and the return is that they don't like you. It's like, well, you know, what am I actually doing here? So a lot of my clients have moved to Thailand, they've moved to the UAE, they've moved to Singapore, they've moved to Vietnam. I've had Andrew Henderson on the channel, who's the nomad capitalist, and he's got an entire industry based on going to where you're treated best. And he's basically going to all these Western nations, all to these, if you will, richer people, saying, get another passport and go to where you're treated best. And evidently, because we have the opportunity to earn money online, whether I'm sitting in Australia or on a beach in pick your nation, I can still generate that income, but I can do it at a much lower taxable rate and with lower expenses to me. We can see also in Japan, as an example, you can buy some pretty impressive real estate there. Throughout most of Southeast Asia, you can buy a lot of impressive real estate compared to what we've got in the Australian market. As I understand it, Sydney is the most expensive real estate market on planet Earth. I think even more expensive than New York. It's like, wow, I thought New York was the pinnacle, but no, you can see some of the prices on some very unimpressive property in Sydney. And therefore, it's like you can see this capital flight. Any message to Australians that you want to give out there, perhaps echoing go to where you're treated best, or your thoughts?
This is the case for Bitcoin, because to me, Bitcoin is where my money is treated best. So I want to be invested in Bitcoin for that reason. To me, Bitcoin represents the ability to opt out of a currency where the government's debasing or robbing you to the tune of 10% per annum. You know, if we went to the bar and filling up a beer of glass and then they literally poured water in the top 10%, we would be absolutely outraged. Yet Australians' philosophy of she'll be right, mate, we don't even care or have any knowledge of it. It's complete apathy to the fact that we are effectively being skimmed from, and no one seems to really care about that. And this is where I think Bitcoin being hard money with an absolute digital scarcity of 21 million is so powerful. Once you understand that there's no way that you can be debased when your money is sitting in Bitcoin, is a very powerful thought. And I think through time and programs like this, we'll get to the stage where everyone in the world understands that they don't want to be debased by a government. They don't want to have an arbitrary or capricious telling of what their money's worth these days and how much extra will be printed when they have no vote on that. And so I look at this and think, therein lies the opportunity. If you don't like those things that are happening to you, there is one way of protecting your capital in the future, and that is Bitcoin.
Watering down the beer is a great metaphor, because Australians would absolutely understand that. Hey, what the hell are you doing putting water in my beer? Yeah, that's exactly what they're doing with our purchasing power. And then they turn around and they blame it on, it was Woolworths, they did it, or it was the manufacturer, they did it. And it's like, no, they've got no choice. And shrinkflation is also a fascinating concept that's happening now, where what we're purchasing, it's the same price, where it's gone up so high, but then the producer could only raise the prices so high, and then they start making the product smaller in itself. And of course, the response from governments is like, oh, it's evil corporations. It's like, no, they're operating in the free market. They can only give you so much at such a price, which actually is a perfect segue in as we move to wrap up. Price predictions, my friend. I believe so long as the dollar has an infinite bottom, Bitcoin has an infinite top. Two-part question. Give me a price prediction and back that up. And second part to that is, do you sell your Bitcoin or do you borrow against it?
A more conservative sort of maybe 5 to 10 year view, I think, on Bitcoin would be, I believe we'll have a 100x in Bitcoin in the next 5 to 10 years. So that would be a price of in excess of $10 million US per Bitcoin, which represents more than 100x from here. I think that's a very realistic assumption to be making when you understand what's happening with this asset and what it can solve for in the future. And if this is the asset that's going to underpin our financial future and our financial markets, which I think it can, then 100x increase from here over the next 5 to 10 years is absolutely plausible. And I look at this and sort of think that, you know, we've been giving advice on Bitcoin since 2016, and we've got clients who are sitting on 170x return over that period of time. So I think that was a period of less than 9 years, or just on 9 years. And I think if you look at the next 10 years, 100x from here is easily achievable with the amount of capital flowing into this part of the world and this asset class. So I think being patient of particular note and import to know what you've got, what you're holding, and make sure that this is extremely valuable. You value that as you expect it to be worth $10 million. To the question of, do you sell your Bitcoin or do you leverage it? I'm of the view that I would not like to sell my Bitcoin, and I'd like to continue earning money over and above what I'm spending so that I can keep adding to my Bitcoin stack. And then through time, what's going to happen is you're going to have a host of financial services built around Bitcoin that allows you to borrow on your Bitcoin, and you'll never have to worry about selling any of it.
Just on that price prediction of 100x, is that because they were going to keep printing money? So if I could, let's just do a thought experiment. If they weren't going to print any more money, or I'm really going for inflation adjusted, is it going up 100x because they keep printing more money, or is it going up because there's such a great demand on this very scarce asset, or do they kind of work symbiotically?
I think there's both. So I think you get an exponential factor on that, and they're going to have to print 10%, 12%, 15% more per annum, whatever that number is. But at the same time, you have got an exponential demand for this. And this is where I think the problem with Bitcoin is that it's seen as a nice to have. It's seen as a want. But what it really is, if you understand what's happening globally, economically, and even locally, that this is actually an economic need, not an economic want. And so when you pair the economic need with huge demand and the current debasement of your own currency, once that clicks from Main Street, there is going to be a rush to the exit or a rush to the door to secure as much of this as you can, because the best part about this is once you hold what you've got, there's no way to be diluted. And this is the reason why Bitcoin will continue to go up forever.
Do you think war is on the horizon? You can see the tensions between China and the US, so certainly the tariff war, maybe a cyber war, psyops. Is kinetic war on the horizon in your forecast?
No, I don't see that happening. I just think there's too much at stake. Too many people with really gnarly weapons that would lead to the extinction of the human race if we really wanted to go full out into a kinetic war. The US and China are having their fun with the Russia-Ukraine situation, and sadly hundreds of thousands, if not millions of people are dying in that capacity over there. I just hope our world leaders are smart enough to realise that this is not the path to prosperity that we want to pursue.
And a pandemic 2.0, will there be another one of those in your mind? Because it seemed to be a good catalyst. A pandemic seemed to be a good way to print a lot of money and grow capital assets. Not getting into any conspiracy theories, but could there be another pandemic to justify another money print and boost up those capital assets?
I really hope not. And this is where I think if the world governments understood what Bitcoin is, this is an opportunity for us to kick up the debt liabilities to a next level that's effectively omnipresent. Effectively, it's a supernatural entity in Bitcoin. There is an unlimited amount of money that the governments can print. However, the asset classes that we're currently presented can only hold a certain amount because we have to live in them, we have to eat. So that means the commodities market, the housing market, and the stock market can really only take so much capital or so much debt. And this is where my comment before, where Bitcoin divorces the Wall Street speculation from Main Street consequences, really comes into hand, that the governments can kick the debt up to a supernatural entity in Bitcoin, and that can solve a lot of the issues that we talked of. The main reason why we're going to have major wars and conflicts and the rest of it is because we really need a global debt reset. And this is where, for the first time in history, we've got an asset that is not controlled by a single entity or country or person for that matter. And it has the ability to take on as much capital as required to basically absolve us of all the debt. So I look at this and think Bitcoin has the ability to provide a global debt jubilee and avoid the world war or the conflicts that would typically precipitate a debt jubilee. So if we look at World War I, World War II, there was basically a huge, after World War II, not World War I really because the Treaty of Versailles, but after World War II, there was effectively absolvement of the global debts. And the US was very magnanimous in their, sort of cutting up of the world and allowing the rest of the world to manufacture and, become on equal terms with the US. And I look at this and think, if we didn't have Bitcoin then, we would need that type of World War II to cut up the globe again and absolve everyone of their debt. But Bitcoin has the opportunity to provide a debt jubilee for everyone at the expense of making a very few Bitcoiners extremely wealthy. So I look at that and think that's a really great trade-off. I'm happy to make a couple of tech dorks really rich if it means we don't have to kill thousands, well, millions, if not billions of people in a pointless world war to reset the global debt structure.
For me, as a veteran, the most exciting part of Bitcoin is it's a money of peace, where fiat is a money of war. I absolutely believe in that, and it makes so much sense to me that if a government can just print money to send their men to war and die, they're probably more leaning to that rather than going into Fort Knox and taking out blocks of gold to send to the other side of the world. That would absolutely change the behavior of governments around the world. And if that's not a good selling point for Bitcoin, I don't know what is. Just before we sign off, I've drawn a lot of inspiration from great thought leaders in this space, such as yourself, Jeff Booth, Michael Saylor, Andreas Antonopoulos, Max Kaiser. In your journey, who's inspired you to learn about Bitcoin?
Boy, that's a list of greats, and very humbled to be included in that. Thank you very much. Suffered some reputational damage would be Trace Mayer. I found him exceptionally brilliant in the early days of my learning curve, that was exceptional in my broader understanding. He speaks so eloquently. He has such a deep knowledge of history and a powerful command of an understanding of Bitcoin. I thought he was excellent, and I've started to see him back on some podcasts recently, and I'm really thrilled at the thought of seeing Trace Mayer. I think he's been sorely missed, and I'd love to see him back on the front lines fighting the good fight when it comes to Bitcoin.
I'm a little embarrassed to say I haven't heard of him, but I've just written it down, and I will absolutely do my research on him.
You're in for a treat then. You're going to love him. He's
good stuff.
Yeah, he's fabulous.
I'm cognizant of your time, and I'm also very grateful for it. If people want to learn more from you or about you, where can they go?
You can go to X or Twitter, and my handle's at Peter BTC Advisor with an ER. Or alternatively, we've got a website where we've got a whole host of blogs and content that will help you self-custody Bitcoin. And if you need our help, you can book a meeting with us. And that website is thebitcoinadvisor.com. And that is advisor with an ER. So if there are any questions, if there's any help that anyone, your followers, would like help with, we'd love to help in any capacity that we can. And we just urge you to buy as much Bitcoin as you're comfortable with, and learn to self-custody that to give you the greatest protection of your freedom moving forward.
Peter, you've done this country very proud. I've thoroughly enjoyed learning from you, not just today, but from your previous podcasts. Very grateful for all your time. Peter Dunworth from the BTC Advisor. Thanks for joining me today.
Thanks very much, Adam. Appreciate it.